Avoid these ETFs. YouTubers constantly recommend what to buy, but rarely which ones to avoid. This is the third video in my auto ETF series. I'm Skylar James. Welcome back to the channel. These are two auto ETFs you'll want to avoid. Take a look at the first VCAR ETF, the Volt Robocar Disruption Car Robotech. A complicated name with a simple mission. Overcharge you and provide very narrow exposure. It barely covers electric or self-driving cars and comes with an expense ratio of over 1%. If you're new to ETF investing, that is crazy high ratio. It shouldn't even be called an expense ratio. It's more of a robbery ratio. 1.09% robbery ratio. So who in the world is buying this with its 109 basis point fee? Nobody. Based on the AUM, VCAR is cute, expensive, and unnecessarily complicated. The three deadly sins of investing. Don't buy VCAR. I'm not an investment advisor. This is just my opinion. Another to rule out is the AUM leader of the space. I normally say follow the money and give extra credit to the AUM leaders, but this time is different. ARKQ should not be an ETF you're considering for EV investing specifically. Hear me out. Do you think Lockheed Martin and JD.com have anything to do with EVs? They don't. Or maybe I'm not getting it. Let me know in the comments below if you can enlighten me. In ARK's opinion, part of these two companies are part of a larger automation, robotics, drone revolution. And they're both in the top 10 holdings of ARKQ. Hey, maybe that's true. And I like Lockheed as a company. They have great fundamentals, but this ETF isn't set to capitalize from the EV revolution that's already happening. The mandate on this ARK ETF is too broad compared to the space we're looking to invest in, specifically ground-based transportation revolution. And beyond whether the holdings fit, remember ARK ETFs are actively managed, and trading too much leads to trading mistakes for both ARK and average investors like us. Earlier this year, ARK sold their entire position of Virgin Galactic at 20 bucks a share. A month later, Virgin shot up to 55. More recently, ARK has been selling off their Chinese tech companies just as those stocks hit 52-week lows. You see the pattern? ARK is selling low. Guess what? I want to stay away from ARKQ, and you should too. If you're a Cathy defender, an EV revolution supporter, an ETF advocate, let me hear from you down below in the comments. I love the insights you all bring to the discussion, or just say hi. Be sure to check out my other auto ETF videos. Those are full of my high conviction picks that will definitely outperform VCAR and ARKQ in the long term. Thanks for watching, and I'll see you on the next one.